What if the seller could pay thousands of your closing costs for you? Yes, you heard that right. There's a strategy many buyers don't even realize it exists, and it can save you serious money at closing. Most buyers save for a down payment, but completely forget about closing costs until it's almost too late. That can be a big shock when you're already stretching your budget to buy a home. But if seller credit, also called as seller concessions, you can keep thousands of dollars in your pocket. I'm Angelica Obregon with Key Mortgages, your go-to loan officer for home buyers, investors, and families ready to make smart money. Before we dive in, make sure to subscribe, hit that like button, and share this video with a friend or your realtor. If you want a personalized strategy to see how seller credit could work in your home purchase, grab a free consultation on my calendar link. It's below in the description. In today's video, we'll break down what seller credits are and how they work, what they can cover, the pros and cons, and how to use them so you bring less cash to the table. By the end, you'll know exactly how to ask for them and how to make them work for you like a pro. Seller credits are basically money from the seller that goes towards your closing costs. Instead of lowering the home price, the seller agrees to pay a portion of your costs when you close. This means you bring less money to closing, which is huge when every dollar counts. Let's say you're buying a $300,000 home with 3% down. That's $9,000. Your closing costs might be around $5,000, so $14,000 total out of pocket. If you negotiate 2% in seller credit, that's $6,000 towards your closing costs, cutting your cash needed almost in half. Just remember, seller credits can only go towards your closing costs and not your down payment, and you don't get cash back at the end. How do you get them? You and your realtor include the credit request in your purchase offer. You can ask for a fixed dollar amount or a percentage of the purchase price. It's all about negotiation and knowing what's normal in your market. In a buyer's market, sellers are often open to it because it helps their home sell faster. In a hot market, it's trickier, so your realtor and loan officer need to be in sync to structure it right. So what can seller credits cover? A lot. Here's where it gets fun. Closing costs, so lender fees, title insurance, attorney fees, escrow, recording fees, prepaid, and taxes, so property taxes, homeowners insurance, and even your HOA dues. You can buy down your rate, so permanent buy down lowers your interest rate for the life of the loan. Temporary buy down gives you lower payments for the first 1 to 3 years. Repairs or inspections, so instead of asking for repairs, get a credit and do them your way. Home warranties or appliances, sometimes sellers include these too. If you learned something new so far, hit that like button, subscribe, and comment below. It helps me reach more buyers and agents who need this information. So pros and cons. You bring less cash to the table. You keep more savings for moving or emergencies. You can use it to buy down your interest rate, and it's flexible because it gives you the opportunity to make the repairs later. Some of the cons. If you increase the home price to include the credit, your loan amount and payment might be slightly higher. The appraisal has to support the final price. In multiple offer markets, too high a credit request can make your offer less competitive. So the balance is always key. So here's how the pros do it. You have to know your market. Ask your realtor if it's common to request credits. Ask for exactly what you need. Don't over ask and risk losing the deal. Work with your loan officer, that's me, to get your true cash to close numbers first. Be specific in your offer, mention the amount or percentage, and adjust if the appraisal comes in lower. Always team up with a realtor who knows how to structure these requests properly. Every loan program has its limits. So for conventional, if you put less than 10% down, your max seller concessions is 3%. If you put between 10% and 25% down, your max is 6%. If you put more than 25% down, you can ask up to 9% for seller concession. For FHA, you can ask up to 6%. Now for VA, you can ask for 4% plus closing costs. USDA, you can ask for up to 6%. In most cases, 1 to 3% is the sweet spot. That helps most buyers without affecting the deal. So when to ask? You can request seller credits in your initial offer, which is the most common. After the inspection, if repairs are needed, take a credit instead of repairs. After appraisal, if the value comes in low, it can be part of the renegotiation. Timing and tone matters, and your realtor and lender should guide you here. So the bottom line, seller credits are one of the most powerful tools for reducing your upfront costs as a home buyer. Used well, they can help you keep your savings intact, make your loan terms stronger, and get into your dream home with less stress. If you found this helpful, Hit like, subscribe, and drop a comment. Would you be using seller credits in your next offer? And don't forget, you can book your free strategy call with me through the link below in my description or mykeymortgages.com to get started. That's your sip of wisdom from the Mortgage Cafe with Angelica. See you in the next video, where I'll share another insider mortgage tip to save you time, money, and stress.